So thank you everyone for joining us for our Ramaz Residential Real Estate Recovery evening. We have not actually had one of our Zoom programs in a little bit of time. And I have to say, thankfully, that as the world has begun to open again and things have really started to be more as we hope they will be, which is more regular for people to be able to be out and without their masks on when they're certainly in certain locations, certainly outside with all the new regulations. It's wonderful to see, but it doesn't mean that we should forget or not continue to pray for those who do suffer, whether it be in America or in anywhere in the world from this terrible pandemic. And we pray for them and we wish them full recoveries. And we continue to stand with the members of our own community who have lost loved ones and who are struggling with various illnesses and related illnesses from COVID. So we stand with you and we're thinking about you. And we say to you that we are here as a community. So this evening we have a very special opportunity. As we promised you way back when all of this began, and we had a real estate roundtable, we were going to bring you a part 2. And we are at a very different moment, and that's really the wonderful opportunity that we have tonight as we called our Residential Real Estate Recovery Roundtable is what we are going to be speaking about. We have the privilege of having several people involved in this industry with us and several very, very prestigious individuals. And I will just introduce them briefly and then hand it over to our moderator, who I will now introduce you to. His name is Jeremy Kamm. He is a Ramaz alum, class of 2008. He's, after graduating from Emory University with a degree in economics, he joined Warburg Realty and now has over 10 years of experience in sales. He was previously in the sales and operations of his own family retail clothing business, which I actually remember very well from when he was in high school, called Designer's Corner. And Jeremy prides himself from that on knowing how to directly interpret a client's tastes and preferences, enabling him or her to deliver exemplary, enabling Jeremy to deliver exemplary customer service and to cultivate a sense of trust and confidence. Jeremy's clients and peers regard him for his artistic nature and attention to detail, an asset that translates with him into his real estate career. And I know you will actually listen to it as he moderates the evening, because that's who Jeremy Kamm is. And we're very, very proud of you, Jeremy, and all the accomplishments that you have made. We have with us the privilege of our one of our parent leaders in Ramaz, Julie Kopel. Julie has graced us with her knowledge, not just of real estate, but of many areas of law, public relations, areas that she has been involved in over her career. And most important, she is the mother of Murray, Romy, and Haley. But I'll just give you a brief overview. She's a former attorney and public relations professional, focused primarily on providing clients with a full range of sophisticated real estate services. She thrives on providing her clients with the highest level of professional service and the kind of results that have built a very diverse and loyal clientele. And I know some of them, and I can tell you, they swear by both Julie and her amazing partner, Stacy Kanbar, who is also a fellow Ramaz parent. And Stacy, I'm sure you're on this evening. Thank you for all that you do for us as well. She is a longtime New Yorker with a passion for the city's history, rich architecture, and diverse neighborhoods. She has a comprehensive knowledge of the city's polished market savvy is infectious, and having spent years working in competitive corporate environments and purchasing and selling properties for her own personal and investment use, she understands that buying and selling real estate is very personal and very competitive. She uses the understanding along with her patient, warm, and very friendly personality, which we all know about for those who know Julie. She makes the entire sales process interesting, engaging, and enjoyable for clients. And for those also who know, Julie also comes from a long, long history of family in the real estate business who have built not just a reputation in real estate generally, but specifically in the ethics and the understanding of what it really means to give back to the community from the success that they've had in their professions. And so it's wonderful to have you with us this evening, Julie. Karen Kostiw, who is a licensed real estate salesperson with Warburg Realty, and comes to us together with Jeremy Kamm. And we thank you, Karen, for all of the knowledge that you'll share with us this evening. And I know it's tremendous. Has an extensive background in real estate and finance, which allows her to uniquely understand her clients' needs and concerns in today's very fast-paced market. She is a former financial services executive with extensive team building and negotiation experience. Karen has proven ability to meet and exceed her clients' goals. She utilizes a project management discipline to ensure all steps in the real estate transaction process move both smoothly and stress-free, with an emphasis on that stress-free part. Karen's extensive professional and personal network include bankers, contractors, and design professionals, which allows her to assemble the perfect team for each of her clients. And finally, as a return by very popular demand, Todd Zuckerman, I can't help but say TJ Zuckerman, but I don't know if his mother's on tonight, so I'm going to call him by his proper name, Todd Zuckerman, class of 2000. TJ is a founding partner at Sedgh and Zuckerman, PLLC. Todd is a co-founding partner of that firm. He is a residential real estate law firm owner, with offices in both Midtown Manhattan, Garden City, Long Island. He represents individual buyers and sellers in the purchases of their homes and handles many of the firm's co-op and condo transactions in Manhattan and Brooklyn. TJ also serves as a closing attorney for several national lenders on their single family and condo co-op transactions, as well as refinance and other loans. I have to just say that TJ has a reputation that is impeccable. I have actually referred people to him, and people thank me and us. When I say me, it's really Ramaz, over and over. He represents the best of what it means to take people through, as a lawyer, the process of purchasing a home, as all of the panelists this evening are really people who I can recommend to you. And what we will do at the end of the evening is Leah Fellner, who coordinates all of this for us. And thank you, Leah, a big shout out. We will send you all of the contact information for everyone on this evening, and you will have the opportunity, if you would like, to be in touch with them with any further questions or any other things that you'd like to speak to them about. I now hand over the evening to Jeremy Kamm, and I thank all of you for being with us. Jeremy?
Well, Kenny, first of all, on behalf of all of us, thank you very much for that very, very warm introduction. And Leah, thank you so much for helping us organize this event. I know it's taken up a lot of your time, but we all really appreciate it. So without further ado, I will kick the conversation to Julie. Julie, what are you currently experiencing in the New York City marketplace? Are you seeing a major return to New York City? Tell us about some of your experiences.
Yes, absolutely. The market is, as we said before when we were discussing this, is on fire. There's really no other way to describe it. Contracts signed on a weekly basis are way up. Pending sales are way up. Inventory, of course, is way up after the very low inventory we had during the pandemic. But the truth is, it's not staying way up for long because demand is catching up. So it's really quite remarkable. I don't know if anyone could have predicted this kind of recovery, and it was really very quick. Particularly for the luxury market, which is anything 4 million and above in New York, the numbers have been outrageous. I think this is the 15th or 16th week in a row that there have been more than 30 contracts signed, which is the longest streak, I think, in something like 10 years. So it's really remarkable. I feel very fortunate to be working in the city. The city feels alive again. I think the people who left, definitely a lot of them came back. But I also think that the people who left did so temporarily and always intended on coming back as long as the city was, getting its life back, which it absolutely is. So it's been great to work in the city these past few months, and I'm really excited about it.
Yeah, absolutely. I know we've been talking about this a lot. Julie services a lot of the Upper East and Upper West Side. My business has been a lot about downtown in Brooklyn, but pretty much citywide, Brooklyn-wide, it's really incredible to see what the market has turned into. You have bidding wars, you have deals going into contract above ask if you're priced right, and no one could have really predicted that the market was going to bounce back, especially to this magnitude. I couldn't agree with you more. Karen, what are you seeing over in New Jersey? And feel free to also chime in about the New York City market.
Well, there definitely was a push out to New Jersey suburbs that was significant. I think initially everybody thought it was only going to be 2 months that we were all stuck dealing with this COVID, but it very quickly became apparent to everyone that this was going to be a longer issue. And size and health were paramount to what a lot of people were thinking about when they moved out to New Jersey. They definitely wanted bigger homes. People who started small families or were thinking of starting small families took advantage and said, you know, this is the time. We might have waited 3 to 5 years, but that forced them to go forward and do that. And we are, just like we're seeing in Brooklyn and Manhattan, people are paying way over the asking price. It's gangbusters on fire in a lot of the areas in New Jersey. You are also seeing people who were hunkering down. They may have had parents in other states or in New Jersey. They were able to save quite a bit. And so some of those people who were a bit younger have kind of come back and have the opportunity to purchase. So in some cases, it allowed people to save money through that hunkering down period. And that, you know, and the pent up demand has forced us to see this amazing historical event. But obviously, you know, New Jersey has open spaces, allows parking, green spaces personally in the backyard, as well as parks and other places. So it's definitely a draw to a lot of people. So that's what we're seeing.
Yeah, I honestly completely agree. And it's interesting, Karen and I were talking about this earlier, and the way that sort of push outside the city has translated to New York is we're definitely seeing buyers looking for more space in the city. They're less so looking at apartments that they may have considered otherwise and realizing that we're all spending a lot more time in our homes, and with those savings that they've been able to accumulate over the last 15 months by virtue of being in quarantine and just not spending the same, they're taking those monies and putting them towards bigger properties, especially when, you know, those listings are priced right, and if it just checks all the boxes, people are definitely preferencing larger homes over some of the other priorities they may have placed on their homes beforehand. Todd, I'll kick it to you.
Sure. So I would say that, you know, last year at this time, the only deals that my firm were really working on were there was a big demand out in Long Island. We have some brokers who refer some business in Great Neck and Port Washington and Sam's Point and Manhasset, and that was pretty much the majority of our business. And obviously the brokers who were giving us referrals in the city and Brooklyn, everything was shut down. You couldn't even show apartments until maybe it was like July or August last year. And so the only deals that I was working on last year were deals that were already in contract, and I found myself really more a therapist than an attorney during those times, because I had a lot of clients who didn't want to move forward with the deals, were looking to get out of deals or to get concessions from sellers. And so that was really how we spent a lot of those summer months last year. But now, you know, our brokers who refer us business are busy, and our referral partners are busy, and so we're busy. We're doing a lot of business in the city and in Brooklyn, and I can tell you, my partner and I don't think we've ever worked on as many buy-sell contracts at a given time as we are right now. It's insane. We've hired 3 or 4 people during the last few months because it's been so busy, and we're just trying to keep up with the demand and keep doing a good job. So we're very thankful. We've kept our doors open and stayed busy. We're very lucky, and we hope to continue to do so.
Yeah, I think we'd all agree with you that our jobs double as therapists more so than we'd like pretty often. The process is emotional. Anyone who says otherwise is kidding themselves, and I couldn't agree with you more. Moving to our next question, again, Julie, how do you think the market has shifted through the pandemic? We all know where we were, call it 15 months ago. So how would you describe that shift from where we were to where we are now?
I mean, it's a really extreme shift. Just like Todd said, I mean, the market was closed, I think, for 4 months. All us brokers were really doing was counseling clients who were really, really nervous, whether they had just entered into contract or something, or, you know, didn't know what to do, and all sorts of contingencies were popping up. Todd and I closed a couple of very difficult deals last summer where there were like 3-hour-long phone calls with our clients. Now, and it's just seemed to drag on for weeks and weeks and weeks. Now, deals are happening so quickly. The last 3 properties we've had, thank God, have gone into contract in a very short period of time, all above ask, bidding wars, to the point where almost I feel like we need to slow it down a little bit. I know that's not a popular thing to say, but I think that people are getting so emotional and are just throwing out numbers because, you know, it's always just you want what other people want. And sometimes you get a little irrational, and sometimes you need to take a step back and think, is this what you really, really want? So, you know, I'm really still trying to counsel my clients, but I also think that when you get into an environment like this where people are just throwing out numbers, sometimes it can get a little nuts, and you need to sort of take a step back and you know, just be careful about everything you're doing so there's no buyer remorse. But the market, you know, has really shifted in a lot of ways. You brought up another point. People want more space. They want space to be able to work from home more, even if they are going to return to their office. I think the reality is just the ability to work from home is going to be here to stay, even if it's not full time. People really started enjoying working out from home. So people want space for Pelotons and gyms. Outdoor space is in a very high demand. I don't think I've ever in my career ever had this many people ask me about outdoor space. So there's been a lot of interesting shifts in what people want, but definitely larger size apartments is the theme of this.
Yeah, absolutely. And just to play on what you were sort of explaining about, you know, that sense of urgency that we're seeing in the marketplace. We're also seeing it on the seller end as well, with all the buzz around such a hot market. And, you know, if your property is getting a lot of attention, sellers are also sort of getting extremely urgent to get the ball rolling, get everything into contract, so much so that I've seen in a handful of the deals that I'm doing, the seller is really putting a tremendous amount of pressure on the buyer who's expressed the interest to get that contract signed. And it's almost to a fault where it sort of shifts the energy of the deal. And things just, you know, there are certain elements to the way a deal gets done, from the offer being accepted to the contract being signed, that just needs to run its course. And I agree with you. I think that to a certain extent, it would be nice if everyone calmed down just a little bit and, you know, let things just fall into place more appropriately.
And Todd probably feels extreme pressure, because I know every time I get on the phone with a lawyer, and especially when I'm representing the buyer, I'm like, do that diligence in 5 minutes and get us a contract signed. And that's a lot of pressure.
It really is. It really is. Karen?
Definitely can echo what's going on in New Jersey and New York, of what you're saying. One of the other things we talked about, sort of the younger group that is sort of leaving New York or coming back to New York. The other community that we haven't talked to is sort of the older community. In New Jersey, we are seeing older community purchases increase through this time period, as well as some of them coming back to New York and saying, you know, I'm going to rent in New York. We're also seeing people saying, you know, I'm adding to my 3 and 4 houses in both New York and New Jersey, as well as other locations. You were mentioning as far as Long Island, I think Mr. Zuckerman was saying that one of the things we have at Warburg, we have a very strong partnership and alliance with Saunders. We have one with Fortune International. We have another one with Houlihan Lawrence. So I think one of the things through this from real estate agents, whether in New York or external, we're making many more connections than ever before. It's not just we're working in that Manhattan market. We've had to expand out and create and build on those other relationships to make deals happen. So that's another thing that we've seen. Another thing that's sort of a little bit different in New Jersey is we kind of use lock boxes. We saw a significant increase in lock boxes very soon after the pandemic started. So like in May, June, and it just built. And still we're utilizing lockbox to view the properties. I think people viewed that a little bit safer. People could be away, kind of go in, you know, wear their gloves and masks. But that is still happening, as well as Matterport 3D tours in New York and New Jersey. Everybody has utilized the online Zoom. All these things are happening more and more to deal virtually. There definitely were less open houses until probably October in New Jersey. We were a little more free than in New York. In New York, we have to fill out 1 million COVID forms, whether it's the building or through Redney. Everybody seemed to have a stake in this. You can only show one at a time. Open houses aren't really open houses. That's very different in New Jersey. They do have these open houses right now, even currently going on. And definitely average sales prices, you saw month to month where people could have gotten deals in New York and New Jersey if people did in July and August, September. But now you've seen things just on fire, and days on market has also decreased. So those are some of the things that I've seen through the pandemic that have occurred in both areas.
Absolutely. And just to piggyback on what you were saying about sort of the new ways in which we market our properties, because of the pandemic, we saw, I don't know about you guys, but I definitely personally work with buyers who were buying properties sight unseen from out of town, sort of relying on their brokers to guide them in the, through the necessary pathways, but relying on new tools like virtual tours, doing FaceTime tours with them, repeating those sorts of procedures. It's really interesting just to see the way in which buyers are now choosing to buy property, which for some people is no longer in person, although now that things are at least headed in what is a more normal direction, I think that we'll start to see things shifting back to the way they were pre-pandemic. I'll kick that.
Will ever be able to do an open house again, Jeremy?
Honestly, I don't know if I care. I really appreciate being able to schedule. When you do the open house by appointment, you sort of get to say, this is the times that we want to show this property. And I think what it's also created is an environment where the buyers that do attend, even the open houses by appointment, they're more serious. When you just have an open house that's sort of open to the public, you can get anyone who may just in. It really narrows. Yeah, it really narrows the buyer pool, and you can more or less anticipate that someone who's scheduling an appointment to see your listing is genuinely interested.
Yeah, it's a good point.
DJ, all you.
Yeah, no, I would just say, on a given transaction, when we represent a purchaser, we very often have 3 clients on the one deal. We have the actual purchaser, we have the broker who referred us a deal, and we may also have the lender, since we represent lenders as well, who is giving the mortgage on the deal. And so it's a lot of pressure that we have to make sure that we get our job done and get it done efficiently and thoroughly, but also quickly, so that everyone who's relying on us to get the work done, it gets done and the contracts get signed, and that leads us to a closing. And so, last year, I never want to be the one who causes a deal to fall apart. And so I'm always trying to get things moving, and I'm the one who's hustling, and I'm emailing and I'm calling. I'm trying to get, the process moving along. And I found last year it was so slow. People were moving forward. Buyers had no pressure. There's no competing offers. They're taking their time. And, I like to try to turn around the deal. I think I can get it done in 5 days when we represent a purchaser, because we have to review board minutes and review offering plans and financials and negotiate contracts. And last year, even on those deals that we did have, it could take 2-3 weeks before a buyer decide, hey, you know what, I'll move forward, or they'll just at the end say, you know what, I'm not moving forward.
Yeah.
Now, as Julie said, and I work with Julie all the time, you got to turn around things very quickly, 2 or 3 days. I feel bad. I have some clients who come to me and say, I wasn't happy with my other attorney. I want to come to you. And I feel badly. The attorney is doing the best job they can. There's only so much time and that someone has. And so definitely feeling a lot more pressure to get things done quickly, get things into contract, but also still do a good job. And come through for our referring partners.
Yeah, absolutely. Sort of directly in response to your comments just now, what are you seeing that sort of shifted in the way deals are getting done? Different elements to the contract that may or may not have been present pre-pandemic that are imperative that you include in a contract today.
Sure. So listen, I think things have, even though we're still in COVID, I think that obviously now everyone's seeing that things are looking a little brighter these days. I'd say that those deals that did go into contract, whether it was July, August, September, October last year, and the market wasn't really back yet. So you were negotiating, we're putting into contracts COVID clauses. If a purchaser is ready to close, but the building's not allowing move-ins or move-outs, you're not obligated to close. Force majeure clauses, which real estate attorneys really weren't putting into their contracts that often prior to COVID, were being put into contracts. A lot of contingencies purchasers were able to negotiate. Sometimes when a purchaser is going for financing, they can negotiate as contingent on financing. It's contingent on the appraisal coming in. We're able to also put in there as contingent on the bank funding. People thought maybe banks would go under, maybe banks wouldn't complete deals and fund the loan. And so we're able to put a lot of these clauses into the contracts. And it was very, very much a very heavily protected purchaser contract. I would say now, I'd say in the last couple of months, you're not really seeing the COVID clauses that much anymore. I think people are saying, hey, New York City is open, it's running, move-ins are happening, closings are happening. And so I'm not really seeing those clauses as much anymore. In terms of, because as you guys have been describing, that it's no longer a buyer's market. So you're not getting those contingencies that you're able to get, 6-7 months ago. A lot of my clients are making offers and they have to change their offer in the middle of negotiation or in the middle of the contract sign. They have to pivot to a non-contingent deal or non-appraisal contingent deal because there are other offers coming in. They're bidding wars. And so where, last year or even 4 or 5 months ago, it was definitely more geared towards a purchaser's favorite contract. I'd say now purchasers just want to get into contract and they're willing to give in things in order to make it happen so they win the apartment.
Yeah. Are you seeing a lot of buyers choose to waive their right to a mortgage contingency? Because especially in Brooklyn for me, with any buyers that are, hope to be contingent on financing, and I always try to drive home a deal when a buyer is financing for that contingency to be in there just to protect them. But I just did a deal where the buyer truly had no choice. Fortunately, she's working with one of the best mortgage brokers out there, so I told her not to worry, and she's more than qualified. But are you seeing a lot of buyers choose to waive that contingency?
So definitely seeing it. And what I tell my clients in that situation is, hey, you could have your entire file underwritten by your loan officer before you even sign a contract. They can review your entire financial picture. They can let you know that the building is on their approved list of lending. And so really all you're waiting on is an appraisal. And so you really could protect yourself if you're just a purchaser who's doing their homework and getting all their paperwork in on time. You could protect yourself by having the commitment from the lender kind of in place even before you even sign a contract. Yes, I had one today where the purchaser didn't waive financing, but waived appraisal in that situation. You're definitely seeing it more and more. And again, that's what they have to do in order to win the deal.
Julie,
in terms of actual closings, we were discussing, earlier today, a lot of remote closings right now. So we all know we used to do closings where you're in a room and there's buyers attorneys, sellers attorneys, brokers, management companies, co-op attorney. Now everything is being done remotely. Buyers are signing with their attorney, sellers are signing with their attorney, wires are being sent around, FedExes, etc. I think this might be how other states work. New York's never really worked this way. I kind of like it. As long as the attorneys are on top of their game and doing their job properly, it goes well. So the closing process is also a little bit different now.
Yeah, I agree with you. Julie, you want to add to that?
Well, I'll say that I did go to my first in-person closing in many, many months this week, and I actually sort of missed it. It was nice talking to your client and having like a human conversation. And, you know, yes, the lawyers just have all the papers in front of them. So I think it goes quicker. These remote closings tend to take all day, in my experience. Again, much more pressure on the lawyers to do it, but I didn't mind having my in-person closing this week. In terms of the contingency, I mean, exactly what Todd's saying. During COVID, and even like the few months after COVID, almost all of our deals had a mortgage contingency. And I can't say that we've had one in like our last 7 or 8 deals. I mean, there's just no time for it. Sellers do not want to take the risk to have to put their apartments back on the market, lose all the crazy, amazing momentum that they have right now. So, you know, in one case last week, we even took a slightly less offer in terms of the purchase price because it didn't have a contingency. I mean, it was close. It wasn't a crazy amount of money, but our sellers just did not want to wait around for the financing to maybe not come through. So we're seeing a lot less of the mortgage contingencies.
Yeah, and it's understandable if you got a tremendous amount of activity circling your listing, and you can, you know, weigh a sure thing versus something that may or may not be contingent on anything. It just makes sense. So, you know, buyers need to be prepared that if they're interested in something, it's likely that other people are also interested in it. And there's definitely this sense of quick movement, responsible quick movement, but definitely quick movement. And you may have to waive certain contingencies that, you know, previously you would have included. Karen, do you want to add anything to that?
Yes, I mean, in New Jersey, we are also seeing appraisal waivers quite a bit. That is definitely happening, and people are being instructed to really not just have a pre-approval. You really need a mortgage commitment pretty much in place. You need to be totally comfortable. You need to get all your financial documents in order to the lenders that you're working with, you know, so that there's no surprises, no issues coming down. There have been strong down payments. The other thing that I've seen both in New York and New Jersey is people think that they can purchase, but lo and behold, there's credit repair issues. So that is also, we're seeing that occur quite a bit. Another unique thing in New Jersey that you're seeing a lot is builders are struggling to keep pace with the demand, and especially with small firms. So they've stopped signing contracts in order to catch up. So people can't necessarily buy that new home that they were looking for, or is a significant wait list. And large home builders are experimenting with blind auctions and shifting away from fixed prices and accepting bids on contracts and putting customers on wait lists as well. One of the things you need to be thinking about, probably both in New York and New Jersey, because I think once the new development in New York gets absorbed, it's going to be quite some time that people are going to be able to find newer projects eventually. But we are seeing that in New Jersey. Rising construction costs, including labor, lumber, delays in appliances, have caused longer timelines and, you know, time to complete projects, or even those are things that are going into contracts because they don't have the appliances. It's going to take some time to get them. So there is delays and issues surrounding that. Another thing that you're seeing in contracts, mainly with home builders, because of what I had just indicated, is escalation clause. You know, the 40% of home builders are including escalation clauses to contracts to recoup the higher materials and costs according to the National Home Builders Association. So that is also things we're seeing. You know, people don't pay any attention. They think, they watch these shows on television and think I can get this and that, whatever. But lo and behold, that's not what they're going to be seeing. And oftentimes they're having to purchase older product because the newer product just isn't out there for them.
Yeah, you know, some of that is also translating in New York as well. If you're buying in a new development and, you know, they don't have their certificate of occupancy yet and they don't have their tax lots recorded yet, we're definitely seeing major delays with, you know, closing dates. DOB is just inundated with backlogged work from the pandemic that has just yet to have been completed, and it is taking a significant amount of more time, even with the help of an expediter or some other, person that you could help move things along to get those sorts of deals done. So I completely agree with you. I think that's also happening here. Just to
Which,
sort
by
of,
the way, Jeremy, you made a really good point. Sorry to interrupt you. I mean, in general, renovated products for that very reason are flying off the shelf, because there are a lot of delays and backups, and it's still COVID, so there are still a lot of building restrictions on how many construction people can be in the apartment at once, and all sorts of different time constraints on projects. And I'm not talking about just new development, just your average run-of-the-mill co-op or condo that needs work. People are a little bit more nervous about entering into these long-term projects. And so we at least are finding that renovated projects, mint condition apartments are literally flying off the shelf because people just don't want to go down that road. Absolutely.
Absolutely. I'm going to we got a question from someone in the audience, so I'll just hand it off to you guys. How do you feel about the market as far as investor friendliness? Do you think it's a good time for investors to buy? Any delays with, the DOB affecting the opportunity for investors to buy in their responses to alteration agreements, et cetera? I'll let you start, Julie.
Truthfully, I haven't had a ton of investor clients recently. It's really been primary users. I was doing some searches for some clients a couple of months ago, and what I was finding is that rents were still really down. And so it was very tough to cover your expenses when you're buying an investment property. And what I told most people was, listen, I believe in New York. I believe in its recovery. As long as you're willing to be patient and you aren't going to necessarily, turn a profit right away, you're probably still okay in the long term. But right now, and even though I don't do that many rental deals, I think rents, while they're much better than they were, it's still a slower recovery than the sales market. So, I'd like to see a little bit more movement there before saying it's, an excellent time to jump in.
Yeah, I definitely agree with you. I think for investors questioning whether or not this is the right time to buy, I think it's a matter of what property you're buying and where you're buying it, as
Absolutely.
well as whether or not you'll be financing versus paying all cash. Because like Julie said, the long-term game is definitely still there. New York always recovers. We can see the way it's even recovering from the pandemic. The market is truly on fire. So if you are able to pay for property in all cash and you're willing to, accept a certain cap rate, whether that's at 3%, a little bit above 3%, if you're lucky enough to be near 4%, and you are paying all cash and you don't have to worry about covering, your HOA fees, your common charges and taxes and so on, it likely is a good time to invest, because compared to 2015 and 2016, Julie and I were talking about this earlier, we are still down at about 10%. And pricing is everything in this market. It may be a hot market, but if you are priced improperly, or your property is not going anywhere. So it really just all depends on the kind of property you're buying and where you're buying it and the circumstances of the transaction.
For sure.
Yeah. And sort of just to piggyback on that question, we've been talking a lot about how hot the market is, and that can sort of suggest that, prices are rising. But do you think this is a good time to buy and or sell?
Should I answer?
Sure.
I mean, I think it's an amazing time to sell, for sure. Any of my clients who are sort of a little bit slow in getting their acts together, whether they need to do some home improvements or want to do some staging, I'm telling them to move as quickly as possible, because the market is hot now, and I don't know how long it will last. I don't know if this demand is sort of sustainable. Is it a good time to buy? I mean, I think it's a good time to buy if you can stop yourself from getting really overly emotional about the process. I'm finding it's a very, very stressful time for buyers, and they're being forced to really rush into something. And I think that sometimes people just want to jump in because they're afraid to miss out on a good deal. But I don't know if there are that many good deals left. They're still out there, but I just think you need to be prepared for the craziness that's happening right now. For my few clients who I don't think have the appetite for that, I've been telling them I have a feeling, I could be wrong, that things are gonna like slow down a little bit over the summer, and then things will start to normalize a little bit, and we'll just have a regular healthy market in the fall as opposed to, you know, a market on steroids.
Yeah, no, I definitely agree. I do think that there are deals to be made, especially with properties that do require some work. I think the majority, I think the majority of the buyers out there really do want turnkey property. They don't want to be burdened with, you know, any aspect of a renovation. Even for some of my buyers, down to refinishing floors, they genuinely just don't want to partake in any sort of renovation whatsoever. So if you are a buyer who even covets the notion of a project and, you know, being able to put your own spin on your home, there are definitely good deals to be made, because those sorts of apartments are being sold at discounts, no question. And if they're not,
and they're larger, and they're usually larger, those ones.
True, they are often larger, especially if they're in pre-war co-ops, and, you know, they just carry more square footage.
Mm-hmm.
And I would just say also that, you know, even though we may have gotten a little bit spoiled with the mortgage rates, you know, last year, maybe they're a tick higher now, like these are still historically low mortgage rates, and you can still get, you know, an amazing loan at a very low rate. And so from that perspective, it could be a good time to buy because, you know, money's so cheap.
Yeah.
I think a lot of people have been living through very low interest rates environments, so they don't almost believe that there can be high interest rate environments. I agree with everybody that the low interest rate environments, the extremely high demand, it's the time to sell, as well as, you know, with the buyers, you know, I think it makes sense for them to be purchasing some of these older homes or co-ops, because as I said, the size, commodity prices have skyrocketed. So it's going to be difficult for them to even ascertain something that's brand spanking new. Here they can get into the market still.
I'm going to grab another question from Michelle. Are you finding that people are moving away from the limitations of co-ops and leaning more towards condos? Julie, you can kick us off.
I mean, 100%. If you look at the numbers, the theme of this recovery is larger sized condos. That's what people want. And I'm going to correct myself, as just like you said, there are still deals on pre-war co-ops that need work, 100%, because the combination of the property needing work and people just in this kind of a low interest rate environment do not want to go into a 50% building, which, as we know, so many of them are on Park Avenue and on Central Park West and in other, parts of the city. People really just don't want to part with that kind of money when money is so cheap. And also, people don't want to deal with all of the other nonsense that comes along with co-ops. The really terrible board package that you often have to put together that takes forever. The limitations, obviously, on subletting and, what kind of dog you can have and how many, there's just so many, as we know, and there has really been a shift against that kind of product. There's always going to be people who still love those pre-war co-ops, but I definitely have clients who may have looked at them in the past and now are telling me they really just want to go the condo route.
Do you think that's true even for your Upper East Side clients? Only because the Upper East Side, has 10 co-ops per one single condo. So,
yeah.
The majority of the marketplace is still saturated with pre-war co-ops.
I mean, I think I love my clients who have vision. I mean, I think people who walk into an apartment and even if it needs a ton of work and can just sort of see the end product and aren't scared about getting into a project, there are those awesome clients of mine who I think it's great. I think they're going to get a great deal and they're going to have probably a larger square footage, amazing home in an incredible location. And that's not to say that some of my co-op buyers won't end up in a co-op, but for the first time, they're sort of saying, you know what, tell me about that new development on 2nd Avenue, or tell me about, what's going on 79th and Madison. As we all know, the Beckford
Oh.
was the most recent condo project that really just killed it. I mean, they sold all their units very quickly. And I just think that there is an appetite for also these fully amenitized buildings. I mean, people really do want the bells and whistles, the gyms and the basketball courts and the movie theaters and the roof decks. And, you know, I just think that that's too sparkly to not at least take a look at.
No,
But
I agree with you.
There is also a group of people that are looking to keep the monthlies low. And so those high amenity buildings are not for them. So there is always going to be those people who are saying, give me the low monthly. I don't need all those bells and whistles. I've had a lot of clients through the pandemic and even before. That's exactly, and they've had the cash, a lot of money to buy something in those big fancy buildings, but they say, no, I just want the lower monthlies. You know, I want to use my money elsewhere.
No, absolutely. And I think there were also some buyers or sellers even who were thinking about trading in their homes, realized that during the pandemic, there may or may not be value in living in a more intimate-like building, a smaller building, maybe not even a doorman building, as long as the building had the proper level of security. There are just different sorts of tastes and preferences when it comes to the amenity-driven like buildings with all the bells and whistles. It's for some and not necessarily for others.
And Julie mentioned another thing that I'm beginning to see a trend of as far as some of those upper, we would say, the co-ops that requiring a lot of financing, you know, down, they are loosening that up in order to bring people
100%.
to realize that people want to use their money in a different fashion. So that is also a trend we're beginning to see as well.
Yeah, there are definitely some of those premier Upper East Side co-ops that were 50% financing that are loosening, you know, towards a 65% number. It just opens up the buyer pool, especially for people that want to use those funds for, you know, other investment purposes. So that also.
Yeah, even other rules. I mean, you know, everyone in the world got a dog during COVID, and so if you're a building now. Me also. So if you're a building now that's not going to allow pets, you're in big trouble. Your buyer pool starts to shrink tremendously. So, you know, good luck to you. The co-ops that are making those changes are really the ones that are going to see, you know, the higher prices of those homes. And
it's also long overdue. It's long overdue.
Absolutely.
I can attest to that, Julie. I had someone who wanted to purchase in one of those buildings and the co-op said, no way. And that was their dream apartment, and it's still sold.
I was on a deal where the building had a rule where you could have 2 dogs, and then they changed the rule saying you can only have 1 dog, and the buyer had 2 dogs, and so he couldn't move forward with the deal, and they denied him because they changed the rule mid-contract. It's just co-ops are ridiculous.
We had a deal that said 2 pets were permitted, and they had 2 dogs and a cat, and we were like trying to decide whether we, you know, discuss the cat or not. But then it turns out that it was a combination apartment. So we said, okay, well, if it's a combo, then each apartment is entitled to have.
Very clever.
So yeah.
I'm just getting that 10-minute warming, so I just want to take this opportunity to kick it to the audience. If anyone has any questions or answers for any of us, we're here to answer anything you've got.
One of the things we haven't spoken about really is that businesses, you know, big companies, JP Morgan, Goldman Sachs, and others are now requiring everybody to kind of come back into town. And so that's why I think now in New York City, and as well as, you know, you're seeing in the Hoboken, Jersey City, there is an influx of people, you know, trying to secure rentals right now. So that is also another trend, and probably will keep the home buying continuing, perhaps even through the summer, just because of that, to be prepared for the fall, as well as schools. The schools are all coming back as well. They're not going to be virtual. They're going to be in person. So that's another trend to kind of think about and look about, you know, what's going to go on.
And I've actually had a lot of, sorry, Jeremy, go ahead.
No. I was going to move to a separate question, so respond first.
I was going to say, I mean, what's been interesting issue to address for our clients is people are asking me if the usual seasonalities in the market still apply. So like, would you bring a, you know, let's say a $3 or $4 million co-op on the Upper East or Upper West Side to market in the dead of summer, like in July or August? And, you know, in the past, you'd probably say, no, let's start till the fall. That buyer, you know, demographic leaves the city for the summer. But COVID sort of screwed everything up. And I'm not so sure that come July, people are just going to, you know, stop buying.
No.
So, you know, I'm curious what your thoughts are on that, Jeremy. Like you know, would normally say hold off, but now I'm not so sure.
Yeah, I honestly 100% agree with you. I think that typically, like you said, the market kind of even at all price points starts to die after July 4th for a bit through Labor Day. There are certainly still people out there, you know, active in the marketplace, but as far as the general activity, it definitely starts to weaken. But I think with this surge of market activity, I honestly don't necessarily see the momentum dying. It may die a bit just because there are people that just simply want to enjoy their summers, but I think we're sort of going to experience a unique summer and a unique, you know, unique activity in the marketplace as a whole. So I would tend to agree with you. If I had someone asking me whether to list or to hold off, I'd say go ahead and list it. There's enough activity, even, you know, untraditionally, that doesn't seem to be dying as of yet, and might as well take advantage of it as long as it's going to run its course, because obviously there will come a time where this buyer demand begins to soften.
Yeah.
It's already June.
Exactly. And the market is still insane.
People are coming back into town. They are being pulled back.
Todd, are you doing many more condo deals than co-op deals?
I'd say definitely a little bit more. I haven't noticed as much as you described, but definitely a little bit more than the norm. 100%. A couple of new dev on the Upper East. Condo sales obviously represent sellers as well, so definitely have a bunch of condo sales as well. So yeah, I would say a little bit for sure.
So want to address a question from Isaac Pollock. They have a 4,000 square foot apartment on Park Avenue, and they've had it on the market for some time, and their broker is pressuring them to drop the price. Do you think that they should keep the price where it is? They're saying it's priced well. Do you think that they should keep it where it is and continue to wait, or do you think that it's, you know, probably indicative that they should drop the price?
I mean, I guess it's
important to mention they are not pressured to sell.
my question would be, you know, how much activity is happening right now with their apartment? Like how many showings are happening per week? Because the truth is, I mean, as crazy as the market is, price is still really, really important. And there are so many buyers out there. So if you're not getting a lot of activity and you're not getting a lot of requests for showing, it's got to be your price.
So they have good activity, but no bites.
It could also be a staging issue as well. So, you know, how is it being presented to that market?
Very specific data. Last 6 months, approximately 41 showings.
I mean, it sounds like a lot, but I have to say it's not that many for 6 months. I think we've had 40 showings on our last few properties, and they've been on for like less than a month. The market is that active. So, you know, it's a higher price point, so you're not going to get quite as much activity, but it does sound like it's a pricing issue to me, without knowing all of the details. You know, things that are priced are really moving, and they're moving too quickly. So that would be.
Yeah, he did just type in that they've gotten lowball offers, but, you know, way off. Which I can attest. People are definitely, especially earlier in COVID, people were sort of just throwing offers at the wall and seeing where they would stick, just as a test. But especially if you're in no pressure to sell, I certainly wouldn't entertain any lowball offers. That seems unnecessary, especially in the marketplace. Another question I would ask is how high are your monthlies, because as Karen said, you know, there are certain buyers that are wary of exceptionally high maintenances.
Yeah. And what kind of condition is it in?
Right, that's,
Another very fair question. Yeah.
Yeah. I will say though, I think that, and Jeremy and you and I were talking about this, I think the best strategy right now is to price your apartment as close to the price that you're willing to take for it as possible. And people think that, you know, that doesn't make sense. I have sellers ask me all the time, you know, but don't you think you're underpricing the apartment? And I always say the same thing. There's no such thing as underpricing an apartment in Manhattan. The market is way too efficient. Water rises to its level. Once the sophisticated buyers out there realize that it's priced well, and there are so many of those people, that's where you get that, you know, flurry of activity, and things tend to just get very busy, and you get above ask offers. So again, I really don't believe in the ability to underprice an apartment. So I would just say you should really price it at the point where you really are willing to take a deal.
Yeah. So you typed in with a maintenance of 6,400 and a condition that needs work, without knowing, you know, the unit and or address, I would second Julie's comments, which is if it's not priced virtually where you want to trade it at, and if that number also makes sense given the comps and the current environment, it's unlikely that you're going to get the offers that you want. I've noticed that as the market has improved, if you are overpriced, people are no longer throwing those offers at the wall and seeing where they stick. If you're just if your price seems inflated, people are just moving on. There's other inventory to explore, and the market is, you know, it's just a fast-paced market, so people aren't going to waste their time necessarily with property that's overpriced. I'm not suggesting that this unit is per se, but if there's a chance that it is and your asking price is not particularly close to where you're willing to land or where the apartment should land, it's likely you're not going to get the offers that you want.
Yeah.
Thank you all so much for joining us. It is just 8:30. Thank you, Julie, Jeremy, TJ, and Karen. It's been really fascinating listening to you all give your insights and sharing your expertise with us. For everybody still with us, we will be sharing Julie and Jeremy and Karen and TJ's information later tomorrow morning or afternoon with you all. So if you have specific questions, Isaac, if you have more questions, I'm sure any of the folks on this panel would be more than happy to chat more with you. Again, thank you all so much for joining us. Be on the lookout for some more programming coming from us. Have a wonderful evening and a lovely rest of your week. Have a great night, everyone.
thank
Thank
you.
you so much.
Bye,
Thank you
everyone.
so much.
For attending.
Happy Memorial Day, everyone.
You too,
Thank
Karen.
you.
Take care, everybody.
Bye.
Bye.